Joey, it's really good to have you with us. You bring to this audience a just incredible amount of experience, not just because you've been in the sector since 2014, but also because you've worn many, many hats. Today you are the Director of Regulatory Affairs at Xapo, and I'll get you to talk a little bit about what Xapo is for those of you who don't know in the audience. But also you work as a specialist consultant with UNODC, traveling around the world working with regulators, really getting very hands-on in what policy, regulation, down to supervision really looks like in this space across all different types of businesses. So very glad to have you with us. And yeah, perhaps kick us off with talking about Xapo Bank and what you guys do.
Yeah, sure. I mean, I've heard Michael and team talk about stablecoins and the importance of those networks, and we're a crypto-native bank. So talk about the bridge between the financial services world and the crypto ecosystem, or let's call it Web3. We're a bank, so it's a very simple 4.1 interest-bearing USD account. We hold BTC for our customers, which is 1% yielding, but we also have stablecoin-based integration to the USD bank account. So it's USD to USDC and vice versa. So we're bridging the gap, as it were. But obviously the history is very different. Maybe some of you know, maybe some of you don't. We were the biggest Bitcoin custodian in the world with about 800,000 BTC back in the day. So the Fort Knox of Bitcoin, as it were. But it's been a progression, moving into this new world and adapting these new standards and pushing those frontiers all the way through to where we are today as a bank and as a credit institution. So yeah, crypto native bank with a very relevant crossover to this industry.
Okay. When we thought about, this session last year was very much focused on, 2022, year of regulation. 2023, though, I think is still very much, and we've heard it already today, you can't escape the sort of policy and regulatory debate if you're interested in this space. And whether you are, a crypto native firm or traditional finance, you're very much focused on just sort of the strategic level, where to focus your business to, invest, which markets to go into, but also thinking about sort of at the compliance level, how to respond to the changing regulatory environment. So I think of 2023 very much as sort of going beyond money laundering and AML rules, CFT rules, and thinking about other aspects of the policy environment. So with that, I sort of want to turn to Micah. Good, bad, and ugly. Yeah. Jack's already said, he's very happy about Micah. Should he be happy about Micah? What do we think?
I think, the trigger for regulation in the world was, let's go back to June 2019 and the FATF recommendations. And that's, the FATF are not a global regulatory authority. So they set a standard. There were lots of countries that looked to comply with those standards by introducing basically, let's just call it compliance frameworks. And that's fine, but we keep learning things from the blow-ups that are happening. And the FTX example is the easiest. You can't have a global operating digital finance ecosystem outside of any regulatory perimeter. You can't create really secure environments just by applying compliance frameworks. So it started to happen arguably a few years ago. And it's been relatively slow. I mean, on the self-assessments to the FATF, there were 128 countries that self-assessed. I think 52 had started to comply, 35 had actually implemented something. So it's progressive. Yeah. And then MiCA's sort of come around, and that's, there's different elements to MiCA. I think part of it is fantastic. Legal certainty, pan-European framework, all fantastic things, defining a new standard. But I don't quite buy into the sort of, this is the GDPR of global crypto regulation and a global standard setting exercise. Lots of countries have been doing this for a long, long time. They've not been waiting for the EU to define that as a standard, firstly. And secondly, there are issues with MiCA. I'm going to range into a couple of them. One is proportionality. Do we want to bring this industry within what is effectively a MiFID II, financial services universe? Is there an element of a tech infringement? So if I create on eBay, I sell you this chair, and we define a price at a market value, that's fine. Now I digitize this chair on a blockchain, and I'm a full-blown financial services business within the EU. Is it completely proportionate? Not completely sure. Is it too weighted to an incumbent industry? So banks and MiFID firms, they have massive advantages over a native sort of startup world. Not completely fair. And then even in the stablecoin universe, I was part of the Libra, DM Association, etc., as the Zappo representative, really pushing to define the cleanest possible global standard that could exist. At the same time as the unregulated networks were escalating at huge numbers, we were trying to do that. Within the EU, there is this significant test for a stablecoin, and that is 10 million users, 5 billion of assets, etc. That brings you within the scope or remit of the European Central Bank. That's pretty hefty to deal with. Plus, the other, and it sounds like I'm sort of MiCA bashing, which is not exactly what I want to be doing, but it's also a lot wider than just MiCA. MiCA is a framework, and it defines a regulatory standard. That's fantastic. But the transfer of funds regulations, how that, it's effectively a gold plating of the travel-related requirements. The Data Act, that's sort of on the verge, and Article 30, and this, for smart contract developers to have this requirement to make those effectively terminable smart contracts. What is the implication of that going to be? And like regulatory arbitrage. Within the EU, I'm pretty confident that different authorities will have different standards. They'll have slightly different interpretations of what is caught and what isn't caught, and that will be picked up by the industry. So, and supervisory power. Again, the FTX example is very simple. There was a legal requirement for segregation of custom assets in the law and in the regulation. Did the authorities have the experience and capacity to supervise, monitor, and enforce that? I don't think that they did. So what's going to happen at an EU level when suddenly there are like hundreds of applicants in every country in the EU? Do they have the experience? Not sure. I think there's going to be a bit of a learning curve. So it has huge positives, but there are definite points to consider.
Yeah, and I think the rubber is really going to hit the road, and we've got 1 year until the stablecoin provisions come into force, 18 months until the rest of it comes into force. And I think when you and I were talking earlier, this idea of sort of one jurisdiction, but maybe we're going to end up with 27 systems when we really get into the implementation. And the kind of consequences in terms of arbitrage that we'll see there.
Absolutely, and why than that, we've heard the reference to DeFi a number of times. Some people take the view that DeFi is outside of the scope of MiCA, but look at the definitions. The bringing together of third parties in a transaction that results in a contract for a settlement is a regulated activity. So does every jurisdiction in the EU have the same interpretation of what that means? I'm not sure. I think some of them will go way beyond what some people think. The DeFi world is also one on the fringes of regulatory perimeters. I'm not a big believer in the fact that you just add DeFi and you're suddenly outside of the scope of any prudential supervision. The reality is like a long way beyond that. But it needs thought process. It needs collaboration. It needs innovation, not just tech innovation. It needs compliance innovation. It needs regulatory innovation. All of these concepts of embedded supervision and embedded compliance.
They've been very theoretical.
Yeah, they are. But I think in my experience of dealing with authorities in different parts of the world, there are some that are open to collaborate, sit around a table with some engineers and some experts and some industry representatives and have an open discussion. And there are others that simply don't do that. So they feel that there is a defined framework. Everything needs to operate within that framework, end of story. And that leads to all sorts of challenges as well. So, yeah.
I want to come back to DeFi, but maybe before we get there, one of the interesting things in taking us beyond AML that MiCA does is it looks at prudential requirements, but also market integrity.
Yeah.
Can you talk a little bit about those?
Yeah, I worked on a market integrity initiative. I think that 2 years ago or so, IOSCO published their paper on what they believe to be the appropriate standard. That's option one. Actually, 2018, the AG in New York published its report on all sorts of integrity-related issues to platforms, and then we went through the whole IEO universe and phase where you had exchanges effectively saying they were selling, unregulated exchanges, saying that they were selling $10 million of assets. They were effectively controlling 7 million of it themselves. They'd create markets, influencers, fake transaction volumes, move prices. I mean, market integrity is a real issue. Should all trading platforms or exchanges operate within existing market abuse rules? No, they shouldn't. It doesn't work. Then similarly, is MiCA the solution? They have this Appendix 6, relatively basic rules around insider trading, etc. I'm not convinced that that's the end goal, but it is a core, it is a reported issue, and it is one that there is also tech advancement that allows to deal with all sorts of identifying questions around the integrity of a market and how it operates, and insider trading and control over certain assets and how they're being used. So I think, again, the FATF and their updated recommendations, October 21, they factor that in for countries to consider defining as a standard. Is it really happening? Hasn't really happened fast enough. And why has it not happened fast enough? Again, if you read the recommendation, the output of the FATF, the authorities themselves report back and say, well, we either incredibly say, we don't believe that there's a vast related market in our jurisdiction, which is quite, I mean, they get that spectacularly wrong sometimes, or they say they don't have the understanding, knowledge, or capacity to actually introduce it. I mean, I used actually the Chainalysis report. I was with one regulatory authority. I won't say, I won't give the name of who. And I ran a whole initiative around DeFi standards and regulation. And they stopped me. The only jurisdiction in the world to stop me and say, Joe, this sounds really interesting, but it's not relevant for us. We
don't have any DeFi.
There's no such thing as that. They were ranked. I mean, I can't give the name of the country, but they were ranked in the top 5 in the world in your analysis. And I showed it to them, which led to like stunned silence, lots of people arguing with each other, and then saying, we've decided you can continue. This is now quite interesting. So, yeah, but yeah.
You've already mentioned, I mean, a couple of things there. Sort of MiCA is one piece of the puzzle in Europe. You've also got TFR, which kind of links in some of those definitional questions, which brings in sort of the AML piece, particularly around the travel rule, the Data Act, for example. Anything else on the European front that you think people should be kind of watching for?
The new MLR, I mean, those regulations are sort of maybe down the road slightly, but they need to be considered. People need to plan long term. It's not a sort of short-term game. I think there's quite a few misconceptions. And, it is a global, cross-border digital universe. So people, I mean, Article 61 of MiCA deals with all the solicitation principles. And there are going to be platforms that domicile themselves outside of the EU and look to service people in the EU without triggering those local licensing requirements. That's the reality. How many of them are going to be successful, I don't know. But I mean, MiCA's it's very good. I'm really all for supporting, establishing the right framework and developing the right standard for this ecosystem to grow and flourish. And I think it's going to be a good, significant contributor to that. But it won't be the only one, and it will come into some issues, I think. Yeah.
You pick up an interesting issue there, which is sort of this reverse solicitation issue of being outside the market and being offering services into the market. You made me think of the UK, because of course in the UK, under the current rules, that's still allowed. You can operate you can be based outside of the UK and offer into the UK market, something which the EU has tried to clamp down on in MiCA. UK, where are we? What are we proposing? What's the likelihood that this goes ahead in the foreseeable? I
mean, look, that's going to be a long-term game. You're right with the FCA. I mean, again, all public information. When they issued that notice or order to the Binance Group, it was effectively that they were not regulated in the UK. Did that stop people opening accounts on Binance.com? No. No, it didn't. They continued to do that. It's very difficult because English is the native language. There are jurisdictions in the world that if the language is determined in that local language, it's deemed to be a solicitation.
Yeah.
There are also many triggers that relate to the currency. So if you're dealing with jurisdictions and you're using their local currency as an on-ramp rail, then it's very clear that you're targeting, identifying that market. So I think there are going to be lots of questions around solicitation and the basis for those triggers. But it's also, I mean, what's going to happen in the UK is quite difficult to. I mean, there's a quasi catch-up game with the EU at the moment. But again, sensitivities like the transfer of funds regulations in the EU and the capturing of these sort of unhosted wallet destination addresses within the TFR is not the same as what the UK is talking about. The UK is talking about risk metrics and identifying that wallet before the transaction can be executed. So it's much more practical. It's a much more sort of risk-based approach, arguably. So again, they're going to be all sorts of mini. I keep calling them arbitrage-related situations, but lots of things will continue to develop, I think.
Yeah, so the policy objective is the same, but then the actual how that's being implemented is quite different. I think one of the other things about the UK system, which is quite different, is the fact that they have, rather than go for this standalone regime like MICA for digital assets, they're trying to push the digital asset world into their traditional finance regime. And that has, I mean, there are lots of, I mean, it's very easy for me to sit and talk about challenges, obviously, but if we go way back to the concept of a VASP as defined by the FATF under the 4 main headings, the CASP definition under the EU is different, so it's gone slightly wider. What is a virtual asset? The virtual asset definitions have also gone in slightly different directions, and that's happening across the world. So we are in a difficult situation of there being different interpretations, different activity that falls within or out, and different assets that are caught or not caught within those. Arguably, you'll say, I mean, a stablecoin is not really the same as a utility token, as a unit of BTC, as an NFT. Should they all be treated in the same way, or a platform that allows access to any one of those assets, should those platforms all be regulated in the same way? I don't really think so, but at the moment it's sort of a learning curve for a lot of the authorities. So that is kind of what is happening. I'm not a big believer in. I'm much more. I call it legal entrepreneurship, if you want to, but scoping everything that exists into an existing legacy framework. It just doesn't work. There has to be, and not to go into sort of US examples, but I've sat around a table with extremely smart people since 2017. They were talking about the Howey test, and here we are in 2023, and I'm just thinking, I just can't believe this is. We're still talking about the Howey test.
Still ongoing. So, it needs to be accepted that it forms a new kind of asset that can operate in a new kind of way, and it needs new standards, and it needs that open dialogue and collaboration and discussion. And I think that the industries or the jurisdictions and the authorities that are most adaptive to that will succeed the most. That's what I hope anyway.
Yeah, and I think, not just for the industry as it stands today, where I think already a bespoke framework, can make a lot of sense because you're tailoring to the specificities of it. But there's so much innovation to come, and it's difficult to know where it's for. And if you haven't already got a new framework, continuing to kind of squeeze things into the existing box is going to get more and more difficult as the innovation develops.
Exactly, and again, to go back to the DeFi question we touched on before, the starting point, if we go back to April 2021 and the draft updated guidelines from the FATF, they started to use the word facilitation. So the facilitation of a transaction, I mean, Satoshi Nakamoto was the facilitator of the Bitcoin protocol. I mean, it basically would have captured absolutely anything that had any form, arguably even an investment fund. I mean, that was a facilitator of that network being built or whatever it might have been. And that doesn't work. So thankfully that was carved away, but the starting point was we have a VASP framework, let's just make everything a VASP. So it needs not bringing modern applications of technology into legacy frameworks, it needs a new standard. So, and I always encourage the authorities to sit with the experts. So identify the issues, identify the risks, identify the problems, and they will generate and develop the solutions. And that is the way that this should happen. I mean, Chainalysis is actually another example. I could have, go back 5 years, and I do a presentation to a bank and talk to them about compliance, they would think you're crazy. And then you actually show them a system of how that actually works, and they're just completely blown away. And that's a starting point. There are lots of other ways that I think that can be, that can develop and continue to develop.
The example of trying to fit those new developments into existing frameworks, it makes me also think, going to the other end of the world, of Australia, and where they're trying to bring stable coins within the stored value facility, a definition, and those challenges, once you really kind of get down to it, can get very, very tricky.
Yeah, I mean, that's, the stable coin stuff is super interesting. It's super interesting. Today they are huge networks that are growing at a rate of knots. They are becoming a base currency. Again, the example that was given before by Michael, the sort of evolution of let's just call it technology, or the TCP/IP to an Internet of Value concept, or all of the others. Napster and co. onto it. That's happened in every single industry that exists. I mean, Skype. If Skype had applied for telecoms licenses in 50 jurisdictions, they would have been out of business. They went through this whole VoIP system, and that's become relatively standard across the world. It's happened across so many industries. In the banking world or in the payments world, it hasn't really happened, and the stablecoin networks are gigantic steps forward. And the incumbent banking industries, they don't, it's very difficult for them to support that in certain ways. But that's always been the case. So I sometimes talk about the ATM example, cash in the wall. That was massively opposed. The idea of not dealing with a teller face-to-face, that was completely crazy. Internet banking was completely opposed. That was ludicrous. The idea of having access to a bank account through a computer, why would you want that? It doesn't make any sense. And now we're in the world of sort of cross-border, immediate, zero-cost-based transactions globally. Why would you not want that? And that's what certainly wearing a Zappa hat, that is what we believe in and what we want to facilitate. And I also think it's a bit of a, if we get to the stage of CBDCs and everything else, it will need that infrastructure underneath it. So it's not just the central bank issuing the currency. The entire banking infrastructure would need to develop the wallet systems and conversion systems and everything else. So I do think, it needs to be sort of forward-looking. It needs to be progressive. And there needs to be rules. We want to create secure environments for people to use stablecoins. At the moment, where are the reserves of that stablecoin held? How are they being deployed? What are the risks around that? Is there a massive... With some of the stablecoins, you just don't know. With some of them, and the circles on Paxos platforms, publish that very openly, and it's different, but there's no standard. There are no rules. So I think all of these things are steps forward to create secure and trusted environments, pillars of security and trust.
I'm glad you brought us to banks, because I want to talk about debanking, which I think of as sort of quasi-regulatory, because we haven't seen any rules, any laws out about not banking this sector, and yet it's certainly something that we hear a lot about. What's your perspective on it?
I think it's incredibly different in the world. So the US, the expression, or the choke point 2.0, whatever it was called or referred to, it's sort of there's a very obvious pressure point to the banks as being the entry-exit points to those markets. Very, very, very obvious. On the other end of the world, I was with the Bika platform from Thailand, who just couldn't understand what I was talking about because they have banks lining up to support them in the Thai baht currency. They have super support from the central bank. They're extremely well regulated in that jurisdiction. And they just can't understand what is happening. In the middle of the EU, I mean, I think, next to that, Hong Kong, maybe 2 weeks ago, they published their statements, and it was about banks being able to support this industry, taking a risk-based approach. So that's what I think it should be.
And maybe Argentina too, where we've got a different approach yet again.
Yeah, yet again. So the Hong Kong authorities are basically saying you can bank these businesses and you need to take a risk-based approach. One of the measurements of risk will be the regulation of those crypto asset platforms, which is also obviously developing in Hong Kong. On the opposite side of the world, in Argentina last week, they effectively restricted all access points. Their cross-border movement of assets is extremely concerning. The volatility in the exposure to crypto market, exposure to Bitcoin in Argentina is a very, very conservative. It's a way of reducing your volatility, not increasing it. That creates massive problems as well. And they've just effectively introduced outright restrictions. So, I mean, what is going to happen? I would hope. I mean, I use the expression sometimes. Not all VASPs are created equal. Today, if you say I'm banking a VASP, what does that mean? It could mean in jurisdiction A, it has a legal requirement for a local director and a registered office. And in another jurisdiction, it could be subject to very, very significant requirements and standards. And the banks tend to just blanket all of it as one thing. And they don't go into the actual assessment of that platform, what it is, how it operates, and what it does. And that's what I would want to encourage and see. Show the platforms, allow them to assess you in the right way, and not take these sort of blanket outright approaches. I think it will start to happen. And MiCA will be another valuable contributor to that. Yeah. I would expect if you're a regulated CASP in the EU, you're going to meet a standard that will bring you within more of a comfort zone for those banks, I think.
And I think, I mean, you've mentioned Hong Kong, Singapore reportedly also doing similarly in terms of bringing out some guidance to the banking sector about what good practice when banking businesses, crypto native businesses, actually looks like.
Yeah, again, absolutely. And Singapore's done a lot, and they've advanced a lot of things. They have now slightly different focuses. So, this whole suitability and appropriateness world that exists in financial services, I know that the Singaporean and the MES are looking at that specifically to crypto assets. Yeah. To what extent do you understand this? To what extent, what percentage of your assets are exposed to it? You're getting into the world of assessing that user against their exposure. Yes. And that seems to be, something that they're advancing. But it's getting the balance right. So in Hong Kong, when they initially, on the first draft, basically, even as a fully regulated platform in Hong Kong, you would only be allowed to service professional customers and professional institutional clients. What happened? The industry reacted. There was a massive outflight from Hong Kong, and that's now led to. So it's regulatory arbitrage works both ways. If you set too high a standard, too high a standard, it can move things away. If you set too low a standard, it becomes far too risky for that jurisdiction. So it's a question of pushing for the right balance.
Yeah, I think the story of debanking as you've given those examples from different places around the world is also the story of, there are parts of the world which can be very noisy, but actually you need to look at a little bit in more detail your particular markets to see if that's really what's going on there, and not necessarily get caught up in that noise that we hear about a particular phenomenon.
I agree, and we've not talked about Dubai or that region. I know you've been out there.
Yep.
I mean, lots of stuff happening there.
Yeah,
as well.
huge amounts of stuff happening out there. As Michael mentioned earlier, obviously we've got the new regulatory regime coming out of VARA. You've also got the DFSA in the free zone there, also moving ahead with regulations. And you really see a lot of businesses looking to relocate there or develop new parts of existing businesses in that part of the world, because you do have a very collaborative relationship with the regulator, really looking to try to do something a little bit new. I want to finish with two things, Joey. Bringing it back to your role at Xapo, because I know a lot of people here will be thinking about, well, okay, practically speaking, like, what does that all mean for me? How do you think about, all these developments, and how do you bring it back to the Xapo business, and I guess lessons for people about things that they might want to be thinking about in this kind of growing sort of regulatory environment that we're working in?
Yeah, we're a bank, but I mean, conceptually, it's more decentralized in the sense that we're not going to service a company and provide it with banking services. We want to service the users directly. So we'll service the user and say to them, we're a secure pillar. We are the bank, but we are crypto native and allowing you an entry and exit point to that ecosystem. Take whatever risk you like. It's your asset, but you will want it. You can have assets on unhosted wallets or DeFi-related platforms or whatever it might be. But ultimately, you might want to buy coffee or pay for a flight. We are the exit point from that layer of risk to a pillar of security. And we've done it from a crypto perspective to a banking standard. So when there are consumer duty standards that are developing in the UK, yes, they apply to the bank, we apply them to the VASP. And it's a question of time. I think I see that coming more and more and more. The equalization of standards and some of those requirements around clear segregation and even basic things like corporate governance. But those are things that we already apply, and we are there to service the users of that ecosystem and do it in a very modern and I think very effective way. So, yeah.
I think that's picking up on something Jack said earlier. This is a little bit of what I think of as perhaps the flight to quality.
Exactly. That's exactly right. And I think we're going to see that more and more. And I obviously encourage that across the world with all those platforms that are developing themselves the right way.
We're still only in May. What should people be looking out for as we close out towards the end of 2023 on the policy and regulatory front?
Oh, I think it's an active thing, like legislative developments, regulatory developments can't move at the pace of technology advancements. That's very standard. But the tech, you have to keep on top of what's happening from a policy directional perspective, because if you don't, you are going to be caught out. So, I mean, I would say it's almost a day-to-day exercise in understanding the thinking. And I mean, this is a platform or grouping of, well-connected people in this ecosystem. I would super encourage as much dialogue, communication, interaction, teaching with all of those authorities. We take for granted that we think that they're operating at a very advanced level, and much of the time they're not, and that's quite dangerous. So I would always encourage that level of interaction to, bring them on the journey with us and not learn sort of after the event, as it were. So that would be my message.
Takeaway. I think on perhaps on my my ending note there would also be some of the work we're expecting to see out of the G20 that the FSB has been working on in July. That's going to be very much a kind of a standard for what regulators should take into account when they're developing crypto regulations beyond the AML piece. I think a really interesting piece we're expecting to see is IOSCO's piece on DeFi towards the end of this year. Again, really laying that groundwork. I used to sort of think, DeFi, we've got some time. I think that debate is very much happening now. We've seen it lately with the French paper out on DeFi regulation. We've seen it with the Treasury's paper on illicit finance in DeFi. And so that there's a growing pickup of the DeFi discussion. And so I think as we kind of get towards the end of 2023, there'll be more fleshing out on what it means to bring DeFi within the regulatory process.
I completely agree, although you did mention the FSB, and if there's one expression that I'm allergic to is same activity, same rules, same regulation. We can say similar activity or similar rules and similar regulation, but I'm really against the sort of binary application of 150-year-old frameworks to new modern technologies. But absolutely, all of the things that you've identified are very much on the agenda, and they should absolutely be on the agenda for any DeFi-related platform. They need to understand how to regulate, how to control and manage that risk. And it's all very well saying, no, there is no risk, but I could publish a liquidity pool report on any one of these platforms, and if you share that to a series of authorities, they're not going to say, oh, okay, don't worry, I'm sure this will all fix itself and stuff, and it's not going to work. Yeah. So, yeah.
Joey, thank you very much. Looking forward to continuing the conversation over the rest of the 2 days, and thank you. For anyone who has any questions, don't hesitate to reach out to myself or Joey. Will be around. Thank you.